What's up, y'all? What's up, Extreme Gainz family? I'm Chuck, and I'm still sick. And this is Extreme Gainz. How's everybody doing? I hope everybody had a great week in the market last week. Obviously, I'm still fighting this respiratory infection, but I thought maybe I could push through and get an update and prep video out here. Quick announcement, I am planning on live streaming this Wednesday in lieu of the canceled live stream from last Wednesday. As long as I continue to start feeling better as I am doing here, a little bit at a time here, I should be good to go on Wednesday. So heads up to the YouTube channel and the Twitter page. If I decide that I can't go or I'm not feeling up to it on Wednesday, I'll put out another tweet or post. That way you all know ahead of time. But if you don't hear from me, I am planning on live streaming this Wednesday. Other than that, pretty exciting week coming up here. All kinds of craziness happening in the financial world. Banks are starting to crumble. Dominoes are starting to fall. An emergency Fed meeting scheduled for tomorrow. CPI data this week. PPI data this week. It should be pretty interesting. So hopefully everybody has a great week this week if I don't talk to you. But hopefully we get the live stream in this Wednesday and I'll get to hang out and see a bunch of y'all and talk to y'all on Wednesday. Other than that, I don't have any other announcements. So let's dive into these charts real quick and I'll show you what I'm seeing and what I'm looking at. So currently on the screen is AMC. AMC finished the day on Friday, regular trading hours, down 4.78%. and then up 1.49% in after hours, ending the week trading at 546. The current intra-week snake that has been fulfilling for 10 consecutive weeks now is on the screen in blue. That is the day of the previous divergence from and completion of fulfillment of the previous intra-week snake. You can see that it continued to fulfill all of last week once again, the location of price action within it, and what the upcoming projection would be from it if price action were to continue to fulfill it. Now, for a little more granular projection, this was a potential alternate snake that I was looking at if that upside move outside of what that snake was projecting was a divergence. I clipped a potential new one and it was showing the same exact thing but mirrored. So I went ahead and mirrored this and you'll see that it does project the exact same thing as what that one does, but a little more granular. So I will show you this as well because it does give a more granular projection. So that will be the upcoming projection from the intra-week snake, a little more granular, that I'll be looking at as far as characteristics of movements if price action were to continue to fulfill it. From a technical perspective, the levels that I will be looking at to the upside, I'll be looking at price action to retake that 547. I had talked in last week's weekly update and prep about this macro head and shoulders forming and getting that neckline breach to downside, and it has done exactly that. It covered the distance between the neckline and the next level that I had talked about at that 547, and it did temporarily breach that on Friday, and it has come back up to retest it at the end of day Friday. So if it can retake that level at 547 back upside, the next level I will be looking at will be 592, followed by 621, followed by 663, followed by 723. However, if it were to reject off of that 547 level, I would expect it to come back down here at this confluence of support between the yellow macro descending level of resistance from the macro descending wedge and this 503 level of support resistance. The next level down I would be looking at underneath that, would be 461, followed by 440, followed by 383. And that is everything that I am looking at with AMC. Up next is GME. GME finished the day on Friday, regular trading hours, down 1.54% and then up 0.58% in after hours, ending the week trading at 1735. The current set of intra-week snakes are on the screen. Blue is the day of the previous divergence, and red is the day prior to the previous divergence from and completion of fulfillment of the previous intra-week snake, both of which continued to fulfill their projections all of last week. You can see the continued fulfillment of the day of divergence, where price action is located within it, and what the upcoming projection would be from it if price action were to continue to fulfill it. Likewise, the day prior to continued to fulfill its projection. And you can see if it were to continue to fulfill it, what the upcoming projection would be from it as well. Here are both of them. You can see where they are alike and where they are different moving forward. And there is a diverting point between the two of them, what appears to be this Thursday or Friday if price action were to continue to fulfill them in this consolidative manner and get out here. Then from a technical perspective, the technical levels that I will be looking at, I'm looking at this macro ascending level of support, the blue line, to potentially act as support again with the confluence of that $17 significant level of support and resistance, as it had previously done back here with the confluence of the 1565 and that macro ascending level of support. If that were to provide the support bounce for a continuation to upside, the next level to the upside I'll be looking at will be 1760, followed by $18.50, followed by $19, followed by $20.35, followed by $21. However, to the downside, if that confluence and that $17 level were to breach, obviously 17 from current location would be the first level to the downside. Then the next level down I'll be looking at will be 1565. And that is everything that I am looking at with GME. Last but not least is SPY. SPY finished the day on Friday, regular trading hours, down 1.44%, and then up in after hours 0.31%, excuse me, ending the week trading at 387.10. The current set of intra-week snakes are on the screen. Blue is the day of the previous divergence from and completion of fulfillment of the previous intra-week snake, and red is the day prior to that same divergence. There is blue the day of divergence, and you can see since its initial placement, the continued dead-on fulfillment of it, where price action is located within it, and what the upcoming projection would be from it if price action were to continue to fulfill it. Then red the day prior to, likewise, has continued to fulfill its projection since its initial placement. It did have one minor fractal mirroring throughout right here. I'll show you that. I think you can see it. The rest of it has essentially been candle for candle. Last week was no exception. You can see the continued fulfillment of it, where price action is located within it, and what the upcoming projection would be from it if price action were to continue to fulfill it. Here are both of them, so you can see where they are alike and where they are different moving forward into this upcoming week. Likewise to GME, SPY has a diverting point with both of these current potential intra-week snakes coming up this week, what appears to be either Tuesday or Wednesday right here. From a technical perspective, the technical levels that I will be looking at will be back to the upside from current price location. I'll be looking at a neckline level of 388.40. A breach of it, the next level up I will be looking at will be a retest of the 390. That will be the macro descending level of resistance, which is the big red line here that has housed all of last year's SPY's price action. I would be looking for a retest of it from underneath as a potential resistance now, after it coming back down to test it as support and falling through it here. I would expect it to come back up and potentially retest that as resistance. Then if it were to breach that with a continuation to upside, the next level up I'll be looking at will be this previous build support level right here at 392, followed by 395.50, followed by 400. Then to the downside, from current location or a rejection off of the 388.40 neckline or any of these initial one or two levels. So either the 388.40 or the 390 rejection back downside, or a release from current position back downside. The first level down I will be looking at will be 384.35. That was the support that was found on Friday afternoon. A breach of that, and the next level down, that's the 384.25. The next level down I will be looking at will be the 378. A breach of that, 363. And then a breach of that will be the 356.40. my friends, my family. That is everything that I have, that I am personally looking at with all three tickers moving into this upcoming week. And that is everything I have for this video. If you made it to the end of the video, thank you all very much. Greatly appreciate it. Good luck in the market this week. Make some extreme gains for yourselves. I hope I see you all on Wednesday. Hopefully I can get through this week and get to that live stream and get feeling better here. So if I do, I hope to see you all then. If I don't, good luck in the markets. Make some extreme gains for yourselves, and I will talk to you all on the next one. Later, y'all.